Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go.
What's up, Paul?
Dude, I'm gonna see you tomorrow. Oh no, the next day.
Yeah, we'll see you in 2 days, man. In Canada.
Yeah, I've got a Canadian shirt. I need to dig out of my drawer that we had the beer Olympics a couple years ago at a friend's house. So I was Team Canada just by luck of the draw. So, and I have heritage there, right? So my dad's side, my Fugere, obviously. So
Well, I've got a denim shirt too. Isn't that a Canadian shirt?
yeah, I mean, this is not denim. It's just a red shirt with a white maple leaf on it.
Oh, okay. I'm just gonna wear a Canadian tuxedo at every meeting we go to. Just all denim. Denim Dan. Yeah.
You
Let's-
could.
Yeah. Yeah, still got to pack. I got to find all my clothes because we've been moving into the house for the last 5 days, and it just happened to be the hottest stretch of weather and most humid weather all year long, like in the 90s and humid here. Moving into that house, moving out of two houses into one house, downside, like trying to get rid of stuff, selling stuff on Facebook Marketplace. That's a pain. And
It is.
yeah, and which is why I'm currently in a different setting and I don't have my usual mic. So if I sound different, that's why. Because my house doesn't have Wi-Fi yet. So there's a model house across the street that they office out of, and they said I could use it because nobody's here today. So I'm just hanging out in this model house. Pretty good deal.
Yeah, it is nice.
Kids don't bother me over here.
Right.
Yeah. Yeah, man. Well, yeah, and we don't have a whole lot of time today, unfortunately, because we're kind of on a time crunch with stuff going on this afternoon. But yeah, we wanted to jump in. I think we'll just do some Q&A today, huh? So
Yeah, we got some questions and other things will come up, I think,
yeah,
as well.
yeah. But the Q&A is always good because a lot of these questions are, in fact, a lot of them are questions that come up after somebody's had a policy in force for some time, and they're still unclear about, or maybe you learned it one time and then you forgot, and then it came to your mind, like, oh, how does that work? So
Yeah, I had a proud moment today. Actually, one of my clients, Chris, whom you know, reached out, and he just had his anniversary on one of his policies, and he's looking for an Inforce illustration, which is what I coached him on during the process a year and a half, 2 years ago. Like, hey, we'll do this, every year, and so yeah, he reached out, and I'll run that for him and send it on the way just so he can see what's going on. And
nice. It's always fun
Yeah.
to compare those
yeah,
because illustrations are never going to look the same. Like the illustration you start with is not going to be the same as the one that a year later when you're running Inforce. Yeah.
yeah. And why is that?
Dividends, outstanding loans, primarily, I think is the,
Yeah,
the
I would say two, like dividends for sure, depending on direct recognition, non-direct loans, and then you have did you pay all of your premium on time?
right. Yep.
Yes or no?
If you had intended to pay annually, or the first year you paid annually, and then you go to like monthly payments, years 2 and 3, that affects it a little bit.
Yes, for sure.
But yeah, for sure, if you didn't pay all the premium that you plan to pay, like you didn't maximize the PUA, it's going to look different. It will.
Yeah, that question comes up too. Can I change my mode of premium? Like, am I locked into annual if I start annual? Am I locked into monthly if I start monthly? Am I locked into quarterly or whatever? And of course, the answer is no. You can change your mode of premium whenever you'd like.
Yeah.
I always encourage people, the goal should be to strive toward paying annually, obviously.
Yeah. Um, so which begs the question, well, if I'm paying annually, I have to save up money in somebody else's bank for the
Yeah,
whole
that comes
year.
up a lot too, doesn't it?
Yeah,
And they
right.
don't want to do that.
Yeah, because especially once you get the policy going, because you're like, I don't like the idea of putting my money in somebody else's bank.
I had someone ask the other day, can I pay my next year's premium 6 months early if I have the money?
Yeah,
And I said, no.
I get that every once in a while. In fact, sometimes I get a client that says, "Hey, I just paid year two premium, and it's been 6 months since they paid the first year." And I was like, "You're gonna want to probably take that money back because they're just gonna hold it for you,
Right.
or apply it towards an outstanding loan, right?" So if somebody's got an outstanding
Yes.
loan, I think some people are so hell bent on paying annually because we really push, hey, pay annually whenever you can. But
Yeah.
if you've got an outstanding loan and you're storing your capital in somebody else's bank because you want to build up that annual premium, that's the not the most efficient way to go about it. You're better
No, and
off
you,
paying off that loan.
no question. You covered that too on a previous episode that came up, and you had someone just storing, like doing that, storing money in a savings account somewhere for next year's premium. Meanwhile, there's an outstanding loan on the side. It's like, my dude, pay that loan off, my man. Like,
Yeah,
let's,
like, and I think it's because maybe people don't understand how the interest is calculated and how loan
yeah.
repayment works. So maybe let's go off that. So how does interest on the loan work in the first place?
Yeah, so you take a policy loan out and interest starts being charged or calculated. If you don't make any payments in a year, it's going to roll over at interest. And a
Right.
lot of people will see that on their annual statement when they log into their policy to pay their premium right around that time. They'll see some companies call it, like, I think, loan capitalization or something.
Yep.
And they'll see and they're like, Paul, what is this? And I was like, well, that's the interest. That was the accrued interest that was just charged. And they're like, okay, yeah, that makes sense. And they do the math, and whoa, magic, it comes out exactly right.
Yeah.
But what I like to tell people is I mainly use policy loans for income producing things. So something like real estate syndication or regular old real estate ownership that I own directly myself, or some other private opportunity, right? So all those cash flows, whether they're monthly, quarterly, biannually, whatever, annually, those all get put back against a policy loan,
Right.
because I consider my policy loans as, how can I put this? They're not like a loan, like your normal car loan or mortgage, right? Like, I see that money again,
Yeah.
right?
Very
Like
quickly.
like a revolving door of money is kind of how I think of it. So I'm just putting money back into my own banking system,
Yep.
and I can take it right back out a couple weeks later if I want.
Exactly. So, here's an example for people who are maybe saving money in an account to have next year's annual premium saved up so they can take care of that in one payment, yet they also have an outstanding loan balance. So let's say you took a $10,000 loan and let's say the interest is 5%. Well, if you don't pay any of that 10,000 back for that year, at the end of the year, you will have accrued $500 in interest, right? That's 5% of $10,000.
Yep. Correct.
So, but let's say at the 6 month point, you actually had $5,000 come to you, and you applied that towards the outstanding loan. So you had a 10,000. 6 months later, you got 5,000 that you pay off half of that. So now you have 5,000 that you're paying interest on. Well, at the end of the year, it'll be less than $500
Yes.
that you're paying. It'll actually be, because you only paid that 5% on 10,000 for 6 months, right?
Yes.
So
There's 250.
there's 250
roughly.
and then you paid half a year on $5,000, which is
125.
okay.
Right? Is that right?
Yeah, I don't know, man.
I don't know either.
So Yeah, well, no, it'd be 250.
Oh yeah, I'm sorry. Yes, you had
But
250.
that's you're right, 125 though, because that would be 250 for a full year. So you only paid half a year. That's 125. So at the end of the year,
Yeah.
you add those numbers together, you really only paid $375 in interest instead
Correct.
of 500.
We were saying the same thing, just at different times.
Yes. So
There's a slight delay.
I'm sure that was completely clear to everybody listening. So bottom line, like if you pay that interest or that loan back throughout the year, you're going to pay a smaller volume of interest over the year,
Yes.
right? Because it's calculated daily what your outstanding balance is.
That's right.
And then
Yep.
It's accrued annually.
And
So
you're making principal payments when you make payments.
yeah, so you're saving yourself money by repaying those policy loans as quickly as possible
Right.
because that's less volume of interest you have to pay over the year.
Yep.
So
You're
it makes no
effectively
sense to hold on to that money.
No, it doesn't. You know, there might be in some cases right now because interest rates have gone up and policy loan rates they went up for a little bit, but and then the recent ones have been 5%, at least with the company that I have my policies with.
Mm-hmm.
Is there a way to earn? I would say this. Obviously, if you can earn more, maybe there's some sort of online bank that you found that's paying 5.5 or 6. Maybe that might be worth, but you're going to be taxed on that money anyway. So you really have to make the judgment call of, is it worth it? I'd rather just, frankly, that's not a big enough spread for me to really care. So I'm gonna get taxed on it. So I might as well just pay off.
That's a good point.
Loan.
So it would really need to be more like 7 or 8% that you're
Yeah,
earning on it to even break even.
To make it right, because you have to pay the tax. It's kind of like these. Some of these companies will pay for trips that you earn, right? But then it's income. It's counted as income.
Yeah.
It's anyway.
Yeah.
So.
Yep.
It's all good.
So,
but no, that's a good question. Policy loan interest is important, but again, I'm with you. I think that knowing what to do with next year's premium, some of the companies, or at least most of them, probably have riders where you can put money, a couple of years worth of premium into what they call like a premium deposit fund rider that will earn interest. Some of them have additional riders that earn higher interest, maybe in the 4 to 5% range currently.
Yeah.
So that might be something if you don't need to maintain your liquidity, when you just have 10 years worth of premium, that could be an option for you as well.
Yep. Yeah. Right. And if you don't pay that interest at the end of the year, like you said, it just gets added to the outstanding loan balance, and now you're paying interest on that.
Right.
So bottom line, anytime you have the excess cash just sitting around in somebody else's bank, apply it to your outstanding loan balance. No reason not to.
There's no reason not to.
Yeah.
So to answer Tammy's question, is it simple interest? Yes. And then the interest compounds annually, yes. And then if you didn't pay that interest, yes, that would be added to the balance. So yeah, she basically walked herself through all the correct conclusions.
Right.
So spot on.
Yep. How about this one? Because this is one, our good friend and financial guru, financial entertainer, who's currently undergoing a $150 million lawsuit because of a timeshare company he promoted, or a company that's supposed to get you out of timeshares.
Who does timeshares still?
Have you ever been to one of those timeshare sales things? Those guys all but put you in an armbar to get you to sign the paper.
We had one in the 80s, and we used it once in Florida when I was a kid. 1988, and I don't know. I'd have to ask my parents.
Yeah,
like how that they got out of it or whatever. But
that's why there's so many people who want to get out of them. So, Mr. Ramsey promoted a company that, hey, they'll get you out of this timeshare, and the guy earned how many millions of dollars by promoting this?
Did I hear 30?
It was at least 30. Yeah, $30 million by promoting this company, and this company and now he's being sued.
Don't quote us on that, but you can go read about it it's on the news now.
But all these people, contacted this company, and this dude basically took their money and didn't do anything for them.
I just, we get beat up as insurance guys, right? When you can go onto these YouTube channels and people will be, oh, you don't need whole life insurance. You could do this, you could do that, whatever. And that's certainly his pitch. And then you've got this, these things come out and, all these people, millions of people, literally millions of viewers soaking up what these people say as the gospel for finance. Yep, this is the way to do it. Every person, same way, day in, day out.
Yeah.
Separate yourself from your money for 40 years. Cookie cutter. It's like D.R. Horton House. No offense to anybody. Slap them up and get you moved in. But it's like, this is just, I can't, I want to, I want to go on the next episode if this is talked about and just see the comments like, we're with you,
Yeah. Well, and we're being blamed like the only reason we would ever sell whole life insurance is to make a big old fat commission. As if, as if there's something inherently wrong with capitalism and trying to make money. But two, that's our only motivation.
Right.
Yet, he can go on and promote some company that he never did any work with in the first place because he didn't own a timeshare.
What?
And accept money from them regardless of their performance.
That's right.
Right.
The difference is you and I and other IBC practitioners, we're consumers of whole life insurance. We are not only IBC practitioners authorized through the NNI, but we are users of IBC in our personal and business lives. So I think that's the fundamental difference. I'm not pitching, get out of your timeshare company and, we're an ad-free podcast, right? We don't promote anything except the infinite banking concept as conceived by Nelson Nash. So, but anyway, this will be forgotten because people's attention spans are like 3 seconds and the history of now, forget tomorrow. So whatever. But it's just funny that wait till they find out like that buy term and invest the difference and buy mutual funds over 40 years doesn't work out.
Well, like a lady who I spoke with just this afternoon who came in, she's a podcast listener. Her eyes were opened up when she saw how her parents were being affected by the drop in their 401k during retirement.
It's
she's
real.
like, now they're suffering. And she's like, I actually saw the firsthand effects of if you only have a tax-deferred qualified plan in place in the stock market, and the market drops, and that's all you have, that can make retirement very short. Either you're going to worry yourself to an empty grave or you're going to go back to work.
Yeah, and let's face it, your retirement shouldn't be based on like timing the market. But we hear about that all the time, like that's just the way it is. Well, I got to work another 3 years because the market dipped, and of course, my advisor, we were still all in securities on an aggressive, or moderately aggressive, account distribution or whatever, right? And where they should have been in cash or fixed income or something. And then so now they're caught having to work another 3 to 5 years or 10 years until the market recovers or whatever that means, gets back to where they need it. Right. And by the way, with all the money printing, their account's not worth crap now anyway.
Yeah, and not that people shouldn't be investing somehow and trying to grow their money. That's what you should be trying to grow your capital. But you got to have some certainty somewhere. Like if you have zero certainty in your portfolio, what are you going to do when that market takes a hit? Every 5 years, you can expect a downturn every 5 years. And if you live 30 years in retirement, that's 6 downturns you could experience. Easy. 7.
Just imagine, Dave, if you had taken, and I'm not recommending anyone ever do this, although I do it, but anyway. But imagine a 40-year-old dividend-paying whole life policy, designed as we design them. And, you've been paying on it 40, 50 years, and you're making that premium, and that premium is producing 5 times or 6 times in cash value what the premium just was a couple weeks before, right?
Right.
Like that's certainty.
That's certainty.
And
that would be
very
nice
realistic.
to have kind of I don't want to call it a money changing machine, but I mean, if you could put $1 in and get $5 back, how many dollars do you want to put in at that point?
As many as I can.
As many as you possibly can, but you can't put them in if you didn't plan for it ahead of time. So
That's right.
Don't wait. I mean, you're 50 years old. That's not too old. 40 years old, not too old. 20 years old, not too young to start thinking about that. So just do it. Take action and get it done.
Yep. Yeah, when you look at some juvenile policies or some young American policies, they later in life, I mean, they are just phenomenal.
Oh yeah.
I mean, incredible.
So good. Yeah, I can't wait for my kids to get, well, I can. I don't want them to grow that fast, but when they're my age, I'm going to be asking, hey, how's your policy doing? And I'll just wait for them to say, thank you, Dad.
Yeah, that's right.
Thank you, wise father.
Yeah, now take me to Chick-fil-A.
Yep. Now take me to Furs for the early bird special, which is basically what I got to do now, man. You got baseball at 5:30. You got to get there at 5. Got to leave at 4:45. So you got to eat dinner at like 4:30. We're either eating dinner at 4:30 or 8 o'clock.
Our season's over. They won the championship on Saturday, so.
Nice. Man, we went into extra innings on Sunday and lost the championship to an undefeated team. So that was a bummer, but good for you guys, man. That's awesome.
Yeah, it was like it was like the way they do the playoffs here, it was just a 2-game playoff, and the second game's the championship game, but it was like bracketed. So we had a 500 record, so we played other teams that had similar records, if that makes sense. And then, so I think they had two tiers, and we were in the lower, but it was still good baseball, it was good games, and some great defense. Anthony scored the winning run in the first game.
Oh, that's
you probably
awesome.
saw it on, it was on, it's on
yeah,
Facebook.
you post on Facebook all the time about that
Yeah.
stuff. Yeah, that's fun, man. Well, now you can enjoy the rest of the summer, huh? Like without all those commitments.
They've got some camps and whatever, and but anyway, is that it, or did we want to do anything else?
I think, unfortunately, based on time, I got to roll.
All right. Well, folks, keep sending the questions in. These are excellent questions. There aren't any dumb questions, really. I mean, this is but let me tell you something. Don't overcomplicate the infinite banking concept. Don't overcomplicate dividend paying whole life insurance. These are literally the simplest financial concepts to grasp.
They really are.
It's literally easy. Pay significant premium relative to your income. Let the custodial company, right, or the life insurance company that you're part owner
you're an owner of,
do its job, and you will be fine.
Yep. There you go. You heard it here first.
It's my tip of the day.
Well said.
Thank
well
you.
said, my friend. All right. Well, everybody, until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.